I've always had a long-term mindset with hopes for short-term gains. And fortunately, with almost every single investment I've made, the short-term gains have come. So if you're an investor with that longer-term mindset, I would not worry at all about buying into this stock at today's price.
Now, bring on Rex.
All right, Rex, what's up, man? You get the honorary air horns. Welcome to the Power Hour. How's it going, man?
I'm doing well. How about you guys?
Doing well. All right, so I guess just kick us off, Rex. But before we get into individual names, just give us a little bit of background on yourself. You know what you like to look for when you're trading, etc.
Yeah, so I'm a 19-year-old, which might surprise a lot of the people watching this, and I was just extremely blessed last year. Had about 1,000% return in my portfolio. I think you'd be hard pressed to find any other YouTuber out there.
1,000%. Don't stop. Come on, let's celebrate. You had 1,000% return?
Well, just under it. I got to be honest with you, but I say that humbly.
Woo!
But anyways, yeah, I'm a 19-year-old. Got into it in high school thanks to my high school business teacher. So shout out to W.
Mr. W.
Yeah.
Or is it Mrs. W?
Yep.
W.
Mr.
Mr. W. All right, we need to get Mr. W on here.
Yeah, you better hook it up. But basically what I look for with my investments, first thing I look for is that revenue growth. I like to see 50% or more year over year, and I like to see a history of that. And I like to see projections of that going into the future. Then the second thing I look more in the small cap world. If they have a lot of debt, that's not good for these startup small companies because then they have all this interest expense that eats into the cash flows and the profitability and that sort of thing. So I'm very strict with what I look for in my investments. And I actually have a video coming out on that later this week, so stay tuned for that.
And when you're looking for a low amount of debt, like how low are we talking? Like, is it a percentage of revenue, a percentage of market cap? What exactly are you looking at?
It really just depends on the company. To me, there's good debt and bad debt, right? But yeah, that's probably the second main thing I look for is the low debt beyond the revenue growth.
All right, so there you go. In the first minute, you not only agreed to watch the prank show, but you also gave us the sort of the stock screening criteria. So just to recap real quick, you like small stocks. You want to see 50% year-over-year rev growth with a forecast that will continue. And you want to see low interest payments on debt so that way the company's got plenty of cash flow to keep feeding operations.
Absolutely. And there's more criteria I look for, but I'm going to save that for the video.
Boom. And we get a tease. That. All right. We're off to a strong start here.
You bet.
Okay, awesome. And so the point of this show, right, what we try to deliver every single day to our audience, to ZingerNation out there, are stock ideas, right? That's why we're spending this time together every day. We want to have fun. We want to do the pranks, but also we need to give people ideas. So tell us about some of the individual names you like, why you like them, etc.
Well, my all-time favorite, especially of 2020, is one that Jason's actually in, CleanSpark, CLSK. And then just recently, I don't make new positions very often because, again, I'm very strict with what I look for. But my most recent play is a company called CuriosityStream, ticker symbol CURI. And I can go into more depth about what that company is and why I truly believe in them going forward. Beyond that, I like SG Blocks, SGBX, and then I'm in Workhorse as well, but I consider that more of gamble money just because there's just one big catalyst coming up. And if they don't get that catalyst, the share price could tank. But that's kind of just a general overview of my current positions.
Can we go into CURI? I know a little bit about that, but I'd like to see the CUIR chart and stuff.
Somehow I always catch these stocks before they take off. So CuriosityStream, reason number one I really like them is just their founder. He was the founder of the Discovery Channel, which owns channels like the Science Channel, Animal Planet, all of those sorts of channels. We've seen the shift from channel-driven to menu-driven on-demand content, and CuriosityStream is the only streaming service that is 100% solely focused on the factual films along with these sorts of documentaries. Now, I'm sure lots of you out there are a little skeptical. Why can't Netflix, why can't Disney Plus do this? They can, but the difference is, they might have their 300 to 400 factual films on their service, but those 300 to 400 factual films are also lost in a vast variety of content on their service between scripted dramas, things like that. And currently, CuriosityStream already has like 3,100 titles, and they have plans to build that to 12,000 titles within the next 5 years. So all 12,000 titles are going to be factual films and documentaries. So they're really trying to become that household name for factual films, whereas, Netflix and Disney Plus, you have a lot of other genres and different types of content in that library, so it's going to be more difficult to find. Reason number 2, I like this company. Again, it meets my criteria. The last 3 years, they've doubled their revenues, each of the last 3 years. And they have projections to do 80% revenue growth minimum going into 2021 to, I think, around $71 million in revenue. So there we go. That meets my first criteria I look for. And then number 3, I would just say they don't have a whole lot of debt. So that meets that criteria as well. And just the movement from that channel-driven to menu-driven on-demand content is just going to help this company, continue to prosper.
Profitability, are their margins decent?
Yeah, that's another thing. Their margins are incredible. The maximum cost to develop and produce a factual film is around $500,000 to $600,000 versus a scripted drama or something on Netflix, which would cost $5 to $6 million. So they produce this content for a 20th of the cost that Netflix or Disney Plus can. To me, that's big because through that, the price for the subscription can be very, very low. Like just recently, I subscribed to their service I get equaled out to $1 per month. They're running a holiday deal, but generally it's around $3 per month. So those of you out there thinking, I don't think people are going to want to pay another amount of money for another streaming service. I mean, it's affordable. It's probably the cheapest streaming service out there, and you get to educate yourself. CuriosityStream has premium content. Everything I've seen is just phenomenal content, so the quality does not drop off because of the cheap price either.
Luke, what do you think about Curiosity? Is this one that you
so there's 2 other things that I like about this one, right? One is it's clearly a takeover target. If they start to get a decent number of subscribers and they have a strong content library, there's so many massive players that are trying to get into the streaming market that could take them out, right? Like Netflix is, of course, the obvious one. But then you've got Disney, Comcast. I mean, the list could go on and on. So I love that. And then 2, let's say that they do struggle getting subscribers onto their platform. If they're creating and own all this content, they can 150% license this content out and open up a revenue stream like that. So I like this one. Here's the big question that I have, though, right? The stocks run up 70% over 3 weeks, basically. Do you think that the time to get in is now? That's still okay? Do we need to wait for a pullback? I mean, thoughts on that?
I've always had a long-term mindset with hopes for short-term gains. And fortunately, with almost every single investment I've made, the short-term gains have come. So if you're an investor with that longer-term mindset, I would not worry at all about buying into this stock at today's price, because chances are even 6 months, a year from now, which is considered short-term still, but long-term for some, chances are very high that you're going to make money on that investment. Now, are you getting as good of a price as I got? No, but you're still going to make money. And if you believe in the company, why would you not buy? But on the same note, if you feel like, something I always say is don't buy a $5 hamburger for $50 just because it tastes good, right? If you believe in the company, you believe in where they're going, sure, go ahead and buy in. I would suggest buying in on any dips. I wouldn't buy on a massive green day. That's where I'm at with that. So don't chase if you don't want to. Don't buy a $5 hamburger for $50 just because it tastes good. Run your own research, run your own analysis, and if you like it, you should have no issue getting involved with it currently.
Before you go to your next stock pick, a couple people want to know, like for the 1,000% gain, what was your biggest gaining stock last year, or the biggest 2 gaining stocks? I don't know if it's options or what.
They actually weren't options plays. I generally stay away from options unless I'm very, very confident and bullish in the short term and the long term of the stock. My biggest gainers, I really haven't gone back and seen, but CleanSpark was one of them for sure, and I would think Workhorse is slightly behind CleanSpark on that, but I've had 5, 6, 7 plays that hit triple-digit return pretty quickly, so I don't think I had a losing play in 2020. Now that's pretty easy because it was a very bullish market. I had a lot of those sorts of plays that were triple-digit return where I doubled my money very, very quickly, so it's not like one of them really rocketed and that's the primary reason I hit 1,000% return. No, it's nothing like that. I had a lot of different stocks that did very well for me.
That pulls us back sort of to the beginning when you're talking about, you're teasing your video that you have coming up. So we're going to talk about at the end how people can find that. But your methodology, right? You like the strong revenue growth, you like these smaller names, and you don't want them to have too much debt. It seems like that combination definitely won for you last year.
Yep, and I hope it continues to do that going into the future. Again, there's some more things I look for beyond the little to no debt and the revenue growth, but those are really the two main things. And if you can find companies like that, chances are you're going to be in a good investment going forward. But a lot of it also lies on the management team. How do they handle their company? Are they bought into their own business? That's another thing I really look for when I'm making investments. But just things like that.
Did you own Tesla?
Nope, I did not own. Well, I bought a call option one time running into Battery Day. I sold that call option before Battery Day because I just kind of felt like whatever would come out that day was probably baked in or priced in. So I sold out for a gain there, but I never got into Tesla, no.
I want your story to be shared because the stuff that you did on your own. You learned it. Others can do this stuff for themselves. You're 19 years old. You didn't have some advanced degree. You did the research. And the reason I love what you're doing is you're going deep on these companies. And I'm sure, like, over time, you'll have a couple losers, which you should, because that means you're swinging the bat even bigger. No one's ever going to say, listen, you needed to make more mistakes. You got 1,000%. No one's ever going to say that. I had like 310% this past year, and like that was a home run for me. Now, I'm not trading stocks full time, but it was like a big year. But you're 19 years old. There is intelligence to be shared with the world. So, Rex, congrats, man. And I hope 2021 is even bigger, man. Congrats. Love it.
Yeah, thank you so much, Jason. And congrats on the 310% return. That's nothing to scoff at.
We can't let you leave without talking about CleanSpark.
CleanSpark is focused on the microgrid industry. I'll explain briefly what a microgrid is. So it's basically the traditional power grid, but it's decentralized. So basically you can separate yourself away from the power grid, and through that you never have to pay the power bill ever again. So obviously that's very beneficial to businesses and even individual customers like me who would maybe someday want to put a microgrid on a house. And really where that's best seen is in California, where we've seen these rolling blackouts over the year of 2020. And if you had a microgrid, when PG&E shut off power for however many people they shut it off for, you would not have lost power because the microgrid is decentralized. You own the power.
And that's sort of like the Solar City model, right?
100%. But ATL Data Centers is a Bitcoin mining company, and CleanSpark pairs their microgrid technology and software with this Bitcoin mining facility. And as far as I'm aware, they've demonstrated the lowest cost to mine Bitcoin yet demonstrated in the world. And that's because through their microgrids, they can bring that cost down just so dramatically. And I think they have plans to put like an acre of solar panels on the roof of this facility. And obviously with Bitcoin shooting up, a lot of people have gotten into CleanSpark, a lot of money there. And I think there's a lot of room to go still, just because, I mean, they're growing revenues like crazy. All of their bad debt is paid off. They're virtually debt free. All of these things I look for.
You know, give it short term, long term. I mean, how are you feeling about this thing with the stock trading at $27?
Well, somewhat unfortunately, but more on the fortunate side. But there's that downside there with the recent Bitcoin mining acquisition, is that the stock price is going to follow the price of Bitcoin somewhat, because ATL Data Centers makes up a part of this overall business. So it's only natural. So it's really impossible to say where we're going to go in the short term. We're probably more dependent on Bitcoin than we are microgrids currently. But I will tell you that through this acquisition, they're going to see hundreds of new microgrid proposals coming right at them, because, you know, if they do indeed demonstrate the lowest cost to mine a Bitcoin, you know, how many other mining companies are going to come to them and ask for them to deploy their technology on their facility, right? So short term, impossible to say. Long term, again, I think I've been on record saying I think CleanSpark is going to be a $10 to $15 billion company several years down the line. Back when I said that would equate to about $500 per share. I don't know where that equates to now. Probably less than that, because they have diluted a little bit since then. But the long term, I'm very bullish on this company. So if you're a longer term minded investor, you know, and you have patience, because patience always pays, right?
Yep.
I would have no issue. If I didn't have a position currently, let's just say that. If I did not own any shares currently, I wouldn't have any issue buying shares of this company today with a long-term mindset.
So there you have it. We've got the full pitch on CuriosityStream, CLSK, CleanSpark. I like these, and I like the approach that you take too. It's sort of the tough question of, would you still buy this thing after these stocks have had a run up? You were in them before they had those runs, and I like the way that you approach them. Right, the patience is key and that sort of thing. So I appreciate that, Rex.
Absolutely.
How do people find out more? Right, you teased the stock picking, how you go about about filtering these stocks down and finding them. I know you've got a YouTube presence, you have a Discord. So give us the lowdown on how people stay in touch.
Yep, absolutely. So I'm a YouTuber with over 20,000 subscribers. The growth has been unreal, but my YouTube channel is Rex Finance, REXFINANCE. No spaces, type it into YouTube, you'll find where I'm at. And I have a members only Discord server. So that's a service where people can pay a certain amount per month to get early access to what I'm looking at and what I'm doing, really. They get early access to standalone videos on new companies that I haven't brought to the channel yet. They get early access to, buy and sell alerts and that sort of thing. So that's more exclusive for people that want to pay. But my YouTube channel, Rex Finance, go find it there. I'm on Twitter, Rex_finance. Stock Twits, I think, is just Rex Finance with no spaces. So I'm anywhere and everywhere you can find me. We're really building, I think it's the best communities on all of investing YouTube. No offense to Benzinga over here.
No, that's fine. We'll be fine being second place. As long as you still come on.
Absolutely. I'm ready to come on whenever you guys want me to come on.
Awesome, man. We love it. The audience clearly loves it. It's been awesome having you here with us.
Absolutely, man. I love doing this sort of thing and really just telling my story. 19-year-old. If I'm 19 and can do it, anybody out there can do it at 19 years old. If you have the drive, the passion, the work ethic that other people don't have, to read through the 10Ks, the 10Qs, do your own research, that sort of thing. And that's really what I'm trying to do on my YouTube channel, is make investing young and easy.
I love that message, right? The 19-year-old message. I mean, I joined Benzinga when I was 19 and in college.
Wow.
And every Friday and Saturday, well, people were out partying and my friends were going out and about.
Yeah.
I mean, I was locked up in my room writing a newsletter, right? I was writing a weekend stock newsletter about options, actually, so like specifically about options every Friday, Saturday, and skipping those parties, because it is a lot of that hard work and that drive and just the desire to want to know this stuff and the desire to want to win and be the best. So I love that point that you make.
Yeah, 100%. And I mean, that's something, I'm a college kid too, and I've chosen to stay in, do research on companies, work on my community, work on my YouTube channel, because I really value that. And that's really where the passion, the drive, the work ethic comes in. And again, if I can do it, you can do it. Anybody can do it out there.
Thank you so much for joining us today.
Yeah, thank you for having me on. This was great. I'd love to come on again sometime in the future.
Boom. There we have it. Rex, one final time. You get the air horns for such an awesome performance. There we go. Awesome.